Money is not just earned, it is understood. Welcome to NWH tutorial where financial accounting, economics, and finance are made simple. Previously, we looked at the trial balance, where we found the agreement between the debit and the credit. When we say an agreement, that means the debit and credits happens to be equal. That's what you mean by agreement. But we said that despite our trial balance has balanced, doesn't mean our work, that is a respective book account, is free from error. That's why we said today we are going to discuss some errors that even if they happen, they don't disturb the agreement of a trial balance. Today we are going to look at those errors. You know, number one, the what we call error of omission. This is a situation where a transaction happens. Let's say, for instance, Musa purchased goods worth 5,000. Musa purchased goods worth 5,000. Cash. This is a business. Initially, we need to open two accounts here. We need to open two accounts. We need to open purchase account, put your credit side, debit side. We need to open, or we need to also open cash account. He purchased the goods by cash. What should we do? We are expected to debit purchase account and credit cash account. But with the case of error of omission, you have forgotten to delete the purchase account, neither to credit the cash account. That is to say, the transaction is completely omitted. It's not there in the books. It's not recorded here. It's not recorded here. So therefore, it's not there. So this is what we call error of omission. Even if such errors happens, our trial balance will still agree. It will still balance. The next one is error of commission. This is a situation whereby the right amount has been recorded in the right class of account, but on a wrong person's, in the wrong person's account. Let's say you have two customers. The first one, his name is Bayo. Bayo. They are your data. Bayo. You have another customer named Tayo. Instead of you to record a particular transaction, let's say that all your data, instead of you to record in the book of Bayo, you went and recorded the transaction in the book of Tayo. So this sort type of error will not stop your trial balance from being balanced. So therefore, your trial balance will still agree. Will still agree. So this is what you call error of commission. The next one is error of principal. Error of principal. This same correct amount has been recorded, but in a wrong class of accounts. I made another video about classes of accounts. You need to check on that video to understand the classes of accounts we have. Let me give you an example. Let's see. A business purchase motor vehicle. When a business purchase motor vehicle, which account are you expected to open? You are expected to open motor vehicle accounts and also cash accounts. But look at what happened. Look at what happened. You bought a motor vehicle. Instead of you to record the transaction inside motor vehicle account, you went and recorded the transaction inside motor vehicle expenses account. Remember, according to classification of account, this is a nominal account. This is a real account. So the transaction should be here. Now you went and recorded the transaction here. So this is a kind of error we call error of principal. You've recorded the transaction in a different class of account. That is not even the account, and even they are even different class of account. The next error we are going to look at is error of original entry. Error of original entry. Look at how this error occurs. When you wanted to record a particular transaction, let's say purchase goods worth 500. Purchase goods worth 500. Instead of you to record 500, you went and record 5,000. This is the correct amount to be recorded. You went and recorded 5,000. So this is what you call error of original entry. You have recorded a transaction as 5,000 instead of 500 naira. So your account, your trial balance will still agree. This is example of error of original entry. The next error to look at is complete reversal of entry. Error of complete reversal of entry happens when the transaction has completely reversed. Let's say cash sales 200 naira. Example, cash sales 200 naira or 2,000. Let's call it 2,000. But transaction for this, you are expected to open cash accounts, also open sales accounts. Cash account and sales account, these are the accounts involved. This is your cash account. This is your sales account. The right transaction, cash sales, you are expected to debit cash. Debit cash, the name sales, and also credit sales with the name cash. This is the right transaction you are expected from you for this particular transaction. But in the case of complete reversal of entry, you have reversed the transaction. What I mean by reversing the transaction, the account that's supposed to be debited, that is cash account, you went and credited the cash account. And sales account, as the account that's supposed to be credited, you went and debited the sales account. Look at what happened. What happened in this era? You debited here with the name cash, and also credited here with the name sales. So you can see you have completely reversed the transaction. You have reversed the transaction. So therefore, this is what we call error of complete reversal of entry. Then there is what we call compensating error. Number 6. Compensating error. Compensating error. This error happens when two errors occurs. One error mistakenly cancels the other. Let me give you an example. Let's say you have a purchase account, but your purchase has overstated by 500 naira. Your sales has been overstated by 500 naira. At the same time, your cash account has been understated by the same 500 naira. This one overstated, this one understated. When you force them here, definitely the first error and the other error will cancel another error. So therefore, you are not going to see the understated error or overstated error. You are going to see your trial balance has balanced. This is to tell you, sometimes your numbers may agree, just like what we've done here, but the story behind the numbers is incorrect. So probably if you celebrated before because your trial balance has balance, this lesson might humble you a little. Thank you.